Hello everyone. Good morning to you from this part of the world. It's 9:35 a.m. West African time. That's about 8:35 a.m. UTC, and I'm very excited to welcome you all to our first Forex Morning Mastery session for the new week. Hope you all had a wonderful weekend and of course pumped up and ready for another new week. Well, from last week we were able to secure some significant amount of profit during the course of the previous week. We made profit on both the USOILSPOT, the USDJPY, and of course the XAUUSD. Remember, we were selling the USOILSPOT last week. We were selling the USDJPY last week, and of course we were buying the XAUUSD. Now, as we head into the new week, we are going to be looking at the market dynamics one more time to see if the trend from last week is going to continue, or will the US dollar be very cheap enough to buy this week. And before we go further, I want to welcome the newcomers in the house. You are very much welcome, and I do want to intimate you on what this is all about. Well, the Forex Morning Mastery is an educational avenue where we all come together as a community to have a deeper understanding into what is going on in the financial market from both technical and fundamental perspective. It's important for you to also note that this is not a signal service platform, but an educational avenue where we come to understand what the market participants are doing, and of course use that information to strategically position ourselves for the next move. We run the Forex Morning Mastery 3 times in a week: Monday, Wednesday, and Friday. So I encourage you to mark your timing. Same time, 8:30 a.m. UTC and 9:30 a.m. West African time. So once again, I welcome you all on board and encourage you to actively engage in the comment section. So with that said, let's jump right into the business. And of course, talking about the business, for this week, we are going to be monitoring the same financial instrument. In fact, I was at some point during the weekend was considering to include the GBP USD into our watch list, because it's another simple and interesting trading setup evolving around the GBP USD, which is also which looks very promising this week. But I did share this idea for those of us who were part of the Forex market prep yesterday. At the end of the day, I decided to settle for the USDJPY, the USOILSPOT, and of course my favorite, which is the XAUUSD. Now, before we go any further, it's important for us to also understand what is driving, what are the things to know about the current US dollar market, because the US dollar seems to be cutting across all the assets on our watch list. Now, by the end of last week, we saw a weaker US job report in the form of the NFP, where the data reinforced market expectations for multiple Fed interest rate cuts, keeping the US dollar at its nearest low since the month of November of last year. However, if we consider the recent remark from the Federal Reserve Chairman, that is Jerome Powell, where he did emphasize that the Fed is not in a hurry to cut interest rates amidst the whole of the situation, which for me, I see it as a hawkish remark, which might likely give the US dollar some traction this week. And from a sentimental perspective, I'm beginning to lean towards a rise in the US dollar this week, as I think market participants might see the US dollar as cheap enough to buy at this point in time. However, we are not going to be making our decisions based on sentiment. We're also going to be taking into account the fundamental factors and of course the technical factors that are guiding this market dynamic. Then we also need to also take into account the ongoing concerns over Trump's tariffs, which has had an extra layer of volatility into the market and simultaneously weighing on the US dollar and influencing market sentiments against the dollar. But during the later part of last week, we learned that Donald Trump has dropped the tariff plans on Mexico and Canada, which might probably bring some relief to the market and probably drive some flows into the US dollar market. And then the anticipation of the major event for this week is also going to be a key factor in the US dollar market. We are looking at the CPI, the PPI, and of course the consumer sentiment index. Now, with that said here, and with the little bit of insight into what we are looking forward to, let's dive right into the business. So as always, the first thing we normally do every morning, of course, is to keep tabs with the fundamental factors that will be influencing the sentiment in the market for this week. And by checking the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart. Now, based on the asset we are monitoring for this week, we are going to be focusing on impactful event from both the United States and the Japanese economic docket. And talking about the United States and Japanese economy, these are the events we are looking forward to this week. In fact, there are no high impactful event for the first half of the week. The majority of the high impactful event we are looking forward to are all coming in from the United States, and we are looking at Wednesday, the consumer price index, Thursday, the producer price index, and of course Friday, the consumer sentiment index. Now let's look at what is going to be driving the market before that. So the first half of the week, we've already seen some interesting reports, especially from the Japanese economic docket. This morning we saw the current account balance, which shows a deficit of 257.6 billion Japanese yuan, and then we have the labor cash earning, which is at a deficit of 2.8%, which is not a very good data from the Japanese economy. And of course, we are going to be looking at how the market had reacted to this information. Then later today, 11:50 p.m. UTC, that's about 12:50 p.m. local time, we will be looking at the gross domestic product quarter 4 from the Japanese economic docket. Now, for those who don't know, the gross domestic product gives us an insight into the performance of an economy in the last quarter, and it is gauged in percentage. So from what we have here, the previous quarter says the Japanese economy grew by 0.7%. Will this be the same, or are we going to be saying something better than that? Well, the economists and market participants are projecting a 0.7% expansion. So we look forward to see what the actual data will be. If it comes in way higher than what market participants are expecting, it may likely incite the trend continuation for the Japanese yen. So the timing is 11:50 p.m. UTC. So let's mark out the timing accordingly. Then tomorrow, Tuesday, March 11th, we are looking at the JOLTS job openings report from the United States economic docket. That's about 2 p.m. UTC, 3 p.m. local time. And this is a labor-oriented data that measures job vacancies within the U.S. economy. So if the data comes in higher, it shows that there is the labor sector is strong, and if it comes in lower, it means that the labor sector is weak. And obviously we know how that influences the dollar. If the labor sector is strong, the dollar increases, and if the labor sector is weak, the dollar definitely will drop. So these are the major events we are going to be looking forward to pending Wednesday's trading session. So we're going to be talking about Wednesday's during our Forex Morning Mastery on Wednesday. So between now and tomorrow, these are the events we are looking forward to: the gross domestic product from the Japanese economic docket, and of course the JOLTS job openings. So with that said here, let's dive right into the chart and let's see what is going on in the market. And as always, the first asset we are going to be taking on this morning is the USOILSPOT. Now, on the USOILSPOT, we have some interesting situations going on at the moment. If you look at the trading panel at the bottom of your screen, you would have noticed that I already placed a 2 buy positions on this particular asset as the week started on a strong bullish note. And in fact, before we go into the technical details, it's important for us to analyze and digest the major drivers that will be influencing the market behind the scenes. And from what I can see from the financial feeds on my table, we have a contrasting driver to this market, where the weak US job report that came in on Friday has reinforced expectations of multiple Fed interest rate cut this year, keeping the US dollar near its lowest level since the month of November. And of course, you know what that means. If the value of the US dollar drops, the demand for the USOILSPOT commodity will rise. And why is that so? We know that the USOILSPOT is a US dollar denominated asset, and if the dollar decreases in value, the USOILSPOT becomes cheap, and majority of investors will want to start buying and increase their stockpile, taking advantage of a weaker US dollar. And due to this, demand increases, and when demand increases, what happens? Price will rise. So this for me could be a genuine reason to look out for buying ideas today. And despite the bearish sentiment we noticed through the second half of last week, the downside risks are somewhat capped by Trump's warning on escalating sanctions against Russia, along with potential easing of those sanctions if a ceasefire is reached, helping to stabilize oil prices. So from the look of things and from these two parameters, it is a little bit clear that the market is likely going to rise. But in as much as this is looking promising to the upside, we cannot ignore the concerns from investors about the economic fallout from Trump's trade tariffs and their impact on fuel demand too as well. So we need to pay attention to any development as regards to tariff plans from the United States. Though there has been some easing tension in that regard, where Trump of course lifted these tariffs on Canadian and Mexican goods during the later part of last week, which obviously has given some hope for the US dollar. So if this happens, if investors feel comfortable with this, we might likely see some traction in favor of the US dollar, which could exert selling pressure on the crude oil prices. Then the OPEC plus output hike is also a major concern. I think we talked about this last week, where OPEC has announced plans to raise oil production starting in the month of April. Now, the expected increase in this supply is a significant factor that might put further downward pressure on US crude oil prices. Now, if we talk about this and look at this, you can see that we have both supporting factor to push price higher, and of course we have exerting pressure factor that could push price to the downside. Now, how is the market participant digesting this information? And this can only be revealed if we go into the chart and look at how the price action has been playing out in recent times. Now, to have an holistic perspective into this market, we want to be scaling up into a higher time frame, where my first point of contact will be on the 4 hours time frame. And right here, hold on a second, let me see. Yes, the first point of contact is going to be on the daily time frame, sorry. And right here on the daily time frame, this was what I was able to come up with. And you can see, taking into account the character of price action since July of last year, it is quite obvious that the market was at some point or major part between July and January was more of a bearish move. And this is further confirmed with a series of lower highs. So I have this beautiful descending trend line to mark that bearish move we have here. Now, something interesting happened in January of this year. We saw price break out of that trend line for the first time in 6 months to emphasize that the momentum might likely be shifting at this juncture. And with this scenario here, and theoretically, of course, when price breaks out of a key structure like this, we expect at some point in time price is going to come back, retest the structure in an attempt to continue the uptrend scenario. And of course, look at how price closed last week. We saw it closed exactly at around that descending trend line, where now we are at a critical juncture where, depending on how price reacts to the structure, will determine what our next line of action will be. Now, it doesn't end there. There is more to the structure, as you will see. If we look at what has been going on since September last year, we can see how the market participants had felt the price of oil cheap around the $67 area. You can see every attempt, despite that strong bearish momentum we saw since July, every attempt by sellers to break through has always been met with strong resistance from the buyers. So this simply tells us that buyers are finding the price of oil cheap as soon as it gets into the $67, $65 area, and it has been consistent in the last 7 months. And look at what happened last week. Immediately price tested that area, we saw some buy pressure resume from that particular level. So for me, I have identified this area as a major demand zone going into the new week. And you know how we do it. For the fact that price is within the demand zone, we definitely want to be looking out for buying ideas. Now, my key level for this week is at the $66.50 level, further supporting more buying ideas. And look at how beautifully it shares a confluence with that descending trend line. So because of this important confluence, and considering the fact that we are in a demand zone, it prompted me to trigger a buy position. And as you can see right in the trading panel at the bottom of your screen, I have a buy position running on the US oil spot. Now, for me, the only condition that can make us sell the US oil spot is for price to break down, retest both the demand zone and that trend line. Then I want to start considering selling. But since price still remains above this structure, we want to be maintaining bullish idea. Now let's look at how market participant has been reacting to the structure since the new week began. And for us to see that, we will be I think we have a technical structure on the 4 hours time frame which I want us to see before we go in. So on the 4 hours time frame, look at what we have here. We have a descending channel, and it appears the market has formed a double bottom structure. So this is a technical pattern we are using here. We have a double bottom structure where the neckline of that double bottom structure lines up exactly with that key level we identified on the daily time frame at the $66.50 level. And look at how we have price breakout, retest the neckline in an attempt to continue the uptrend move. And in fact, if price can break out of the resistant line of the descending channel, we definitely will be looking at adding more buy positions to our existing trade. Now let's scale down into the 1 hour time frame, which is our execution time frame, to see the behavioral patterns of market participants through the lens of price action. So we scale down into the 1 hour time frame, and this is what is happening here. So we have a range bound structure already established. For those of you who are with me on my TradingView platform, you must have seen this update here. And look at how the market started the week. Started on a strong bearish note. We saw price drop from the $66.90 level into this area, and the inability of sellers to continue downwards for me was a sign that buyers may likely be taking over the market to the upside. So what I did here was to buy the support line, and then I also added another buy at the breakout of the key level at the $66.50 level. Hopefully price will continue upwards. We definitely want to be looking at adding more buy position at the breakout of the $66.90 level. So what I will do right now is to place a buy stop order above the $66.90 level. You can do that right away if you're going to be part of this journey on the US Oil Spot. So I'll do that and you will see it at the bottom of your screen. So I just placed a buy stop order above the $66.90 level. Now, for those of you who probably have entered this buy position, kindly move your stop losses. I've moved my stop losses to break even at this juncture while we continue to monitor price action around this area. Now, if we are going to be selling the US Oil Spot, we want to see price break down and retest the support line. By the time price breakdown retests the support line, we are already below our key level, and there is something I would like to explain here. If we sell, as soon as price gets into this ascending trend line, kindly move your stop losses, secure the sell position while we monitor price action around this area, as it could be a bust stop that could drive uptrend scenario, of course. And so move your stop losses, secure position while we monitor how price reacts to the trend line. If it breaks down, retests the trend line, then we could be looking at more selling ideas. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give us all an update as at when due. So this is my simple view on the US Oil Spot for this week. For the first half of this week. Let's see how the market will play out, and I want to wish us all the best of luck on this one. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 5-10 seconds off to see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. Hello, Adam Ishak. Is that I've forgotten that name again on Extreme Speed. Is that you? It's been a long time. If that is you, how are you doing? Yes, innocent babe. How are you doing, Adam Ishak? Good morning to you. It's been a long time. Trust you are doing very, very well. Glad to have you around with us this morning. Okay. Well, I'm very well. Thank you very much. I'm very well. Hope you are doing so too. Okay, so in the absence of no further questions, I want to assume that we are all on the same page. Hope you've marked out the structures accordingly as we have illustrated. Like I did say earlier, I already placed a buy stop order at the $66.90 level. I currently have 2 buy positions running on the US Oil Spot. You can see them running at the bottom of your screen. So I am hopeful that the momentum will continue to the upside. And if it doesn't, we are ready to join the breakdown retest of the $66.25 level. So once again, I wish us all the best of luck. Ensure you mark out those structures accordingly, as they will be playing a significant role in guiding our decisions today. And happy to see you too, Adam Ishak. So with that said here, let's move right into the next asset on our watch list. Stay tuned in. We are going to be looking at today is the USDJPY, and of course, just mere looking at the chart, that is the 1 hour time frame on your screen right now, it is quite clear that the market is strongly bearish at this juncture thanks to hawkish Bank of Japan expectations, rising Japanese government bond yield, and then weak US employment data, and of course anticipated Fed easing policies, which also has resulted in persistent trade policy uncertainty. And of course, we have been part of this bearish momentum for about 2 weeks now, I think. Last week we were selling the USDJPY. In fact, we were able to make over 200 pips on this particular asset as price action hits the 147.00 area. If you remember vividly, we talked about this last week Friday. Now, as we head into the new week, the question on everyone's mind, whosoever is trading the USDJPY, is that will this bearish momentum continue, or are there any chances that the US dollar could rebound from this particular point in time? And if we look at the distance of the downtrend, it is quite massive. From last week, we are talking about how many percentage drop is this? Let's see, that's about 430 pips to the downside since last week, which is quite massive. And I'm beginning to think that majority of market participants may find the US dollar cheap enough to buy at this point in time. And besides that, they will of course need some fundamentals that will support buying at this juncture. And looking at my feeds, there are quite a lot of things that we can bank on here that could probably support the support the US dollar against the Japanese yen. Now, there are some investors who believe that if the Federal Reserve manages to maintain policy restraint, avoiding premature rate cuts, the US dollar might receive modest support despite the overall caution in the market. And if we take into account the narrative from the Fed chairman last week, where he mentioned that the Fed is not in a hurry to cut interest rates, well, for me this sounds like an hawkish remark, and investors might find this as an opportunity to buy the US dollar. Then besides that, actions as to the USMCA exemption on goods from Canada and Mexico may offer brief relief, potentially supporting the US dollar in the short term. Now, besides all of these fundamental factors, everything is still leaning towards a bearish move because of these very, very good and robust figures from the Japanese economy. However, if we look at the chart from a technical standpoint, I'm beginning to notice the potential of a reversal setup on this chart. Now, let me share with you what I am looking at. So we're going to scale back up into the higher time frame, and the first point of contact here is the daily time frame. Now, on the daily time frame, the only thing I was able to mark out here was my key level, which is at that psychological area around the 148.00 level, as you will see here, and this was exactly where price action closed last week. And if we look at how important this level is, in fact, go to as far back as the year 2022, this level has played a significant role in determining the direction of price action. So price, it has served as a support line at some point and then as a resistance line at some point. And for price to close around that structure last week, I was beginning to think that this could be a platform that could send price climbing up. Now, to buttress this, there's another feature I would like to share with you here, which is this descending trend line, which has been supporting buying opportunity. So though we have lower lows, of course, but one thing I will call your attention to here is the fact that this trend line has always been respected by the buyers. Look at what happened here. Price touches the trend line, it goes up. The same thing also happened here in February, and then look at what happened here at the beginning of this month. And last week we saw price close exactly around that area. Now the question here is, will price respect this trend line again to go up, or are we going to see a situation where the trend line will be broken to the downside to incite selling ideas? So for us to be able to navigate this, we need a structural detail, and to do this we will scale down into the 4 hours time frame. And on the 4 hours time frame, this was what I was able to come up with. Now look at this. Since the beginning of this year, you can see we have a descending channel. Price has uniformly formed lower lows and lower highs to emphasize the strength of the sellers in this market, and of course the strength of the Japanese yen. And for the fact that price is yet to break down the support line of this descending channel, look at what has been going on since the second half of last week. Sellers found it difficult to break through. Look at what happened here on Thursday. Look at what happened here on Friday. And momentum still remains above this support line. So I'm seeing the potential that price may likely resume buying pressure, maybe back into that resistant line of that descending channel, looking at a minimum of 250 to 300 pips in profit if price moves in that direction. So what we are going to be doing now is to scale down into our execution time frame to see how the market has been reacting to the support line since the beginning of this week, and this will give us a clue into what is likely going to happen. Will the momentum be to the upside, or will it be to the downside? Now, as at the beginning of this week, we have a beautiful range bound structure already. For those of you who are with me on my TradingView platform, I did share an update on this market, and I had the buy position initially at the beginning of the week when I saw this buy pressure resume around the 147.100 area, and I still think the buy position is running, right? Yes, it's still running, but in a loss of about 30 pips at this juncture. You can see it at the bottom of your screen. Now, with the situation we have here, look at what has been going on. Price started the week around the 148.00 area. Remember, this is our key level for the week. Price dropped into the 147.1. We saw a sharp rejection, and right now price is back close to that support line again. So we have a range bound structure already, as price is currently confined within the 148.00 and of course the 147.100 area. Now, you know how we use our range bound structures. Of course, we want to exercise patience, wait for price to either break out of the resistant line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, with this understanding in mind, I would like to share with you in detail how I will be navigating this market. Though I already have a buy position which is running in a loss of about 30 pips at this juncture, but I'm not willing to close it yet due to the fact that price is still sitting above this support line of that descending channel we identified on the higher time frame. So this whole area for me is still looking like buy niche, as it could still incite an uptrend scenario from this particular juncture. So I'm not willing to close this buy position at this point. So with that said, here I'm looking at if you are yet to join this buy, you can have your buy stop order above the 147.5, then add more at the break of the 148.00 area to maximize the potential of this bullish move. So I would like to place my buy stop order for the second position at the 148.00 area, just right above it. I'm going to set that right away. Done. Now, how do we sell the USDJPY? What if the sentiment in the market continue to lean towards the Japanese yen due to the robust expectation that the Bank of Japan will hike interest rates again, which is backed by robust economic data like the wage and persistent inflation in the Japanese economic docket? Well, if I am going to consider selling, I would like to see confirmations before I jump into a sell. And the reason is basically because price appears to be within an area that sellers have been finding it difficult to break through. So we are talking about that support line of that descending channel. So if I do want to sell this breakdown of this, I would like to see something like a retest of structure for further confirmation sake before jumping into a sell. Then if price breaks down the support line of that range bound structure, we will be adding more sell positions to our existing trade. So that is basically how I'm going to be selling the USDJPY today, and that means it's going to take some time. We need a lot of patience here before jumping in. So a breakdown retest of structure would be a good confirmation for us to jump into a sell. So that is basically what I am looking at. I hope I made myself very clear here. Please mark out these levels and structures on your chart, as we're definitely going to be needing them as a reference point to guide our independent trading decisions today. So I will take the next 5-10 seconds off. Let's see if there are any questions before we move right into the final asset on our watch list today. Stay tuned in, guys, and do not forget to give that video a thumbs up. Your likes are very, very important to me, and of course it also helps the algorithm to push the video to a wider audience of traders who may find this content beneficial to them too. And thank you very much as you do so. sorry, sorry for that sound. So I read your comment, Adam Ishak, and like I was saying, it appears it shows it's been a while since you've been with us, and of course the routine is that we monitor 3 financial instruments on a weekly basis. So it's for this week we are looking at the USDJPY, the XAUUSD, and the USOILSPOT. So we monitor these every Monday, Wednesdays, and Friday. But if we still have enough time, I could take you through what the BTC USD is looking like at the moment and what chances both buyers and sellers have around the current structure. But we are not going to be following up on that trade. I don't know if you would mind that. All right. So in the absence of no questions, let's move on to the final asset on our watch list for this week. Asset we are looking at this morning is the XAUUSD, my favorite amongst them all, and the market has been quite choppy since the beginning of the week, as you can see here, thanks to worries over Trump's tariff plans, potential global trade war, and persistent uncertainty around the shifting of tariff agenda and protectionist policy, which is may likely add to gold's appeal amidst market turbulence at this juncture. And if we look at things from a fundamental perspective, I strongly believe that the path of least resistance for gold still remains to the upside. Now, I will not be talking about the higher time frame in this regard. I already shared a market updates. I already done a top-down analysis on this asset during the weekend, which I shared here on YouTube, my Telegram platform, and of course on my TradingView platform. So if you missed out on it, you want to go ahead and check it to have a deeper understanding into what I think is going on in the market and how we are going to be navigating this market. So I will just jump right into our execution time frame, which is the 1 hour time frame, where I have given an update already on my TradingView platform. If you are following me on TradingView, you must have seen this update. By the time I shared this update, we have the situation where price was confined within the 2009-18 and the 2009-07 area, giving us an insight into the prevailing uncertainty at that particular point in time. And of course, I took a buy position on the XAUUSD when I updated us, and of course the buy position closed in a loss. And of course I took a sell after price broke down the 2009-07.25 level. You can see the sell is still running. So okay, I think I sold somewhere here. I sold somewhere here after seeing the strong bearish engulfing candle engulf that bullish candle, and currently I'm in a loss of about 4 pips. Is it 4? Yes, 4 pips right now, as this engulfing bullish candle comes back to retest structure at this point. So what do I think is going on here? Well, from a technical perspective, and considering the strong engulfing bearish candle that slices through our key level at the 2009-00 area, it appears that sellers are probably gaining momentum. And of course, I mentioned earlier that my feeling tells me that the dollar is going to rise this week. And if we look at the way price is evolving following Friday's session, I'm beginning to see a downtrend scenario. So if we connect the series of lower highs here, we are looking at something that looks like this. And so this is newly added to the structure, and this is definitely going to be playing a significant role in guiding our trading decisions today and tomorrow. And you know how we use our descending trend lines. Of course, as long as price remains below them, we will be looking out for patterns and structures that support selling ideas. So at the moment, price is below the descending trend line, so I would definitely want to be selling the XAUUSD. And for those of you who are yet to join, below the 2,907.25 level is looking promising to join or add more sell positions. So I will place a sell stop order right away below that structure immediately. So let me do that right away. Sell stop order. Okay, so I just did. So 913. So I just did now. So hopefully the market continues to drop to the downside, and so at the moment I want to maintain a bearish bias at the moment. But if I see price break out and retest this descending trend line, then I will consider buying. So for me to buy here, I would need to exercise patience and wait. It could take 2, 3, 4 hours before it manifests. But let's wait and see a breakout retest of this trend line before jumping into a buy. I will definitely be updating us on both my TradingView and Telegram platform on whatever happens around this particular area. So this is my simple view on the XAUUSD. Very simple setup we have here. Let's see how the market is going to be reacting to the structure. Now, while I wait to see if there are any questions whatsoever, let's quickly run through the BTC USD. Should we? Is Adam Ishak still around? So I will just wait for about 1-2 seconds and see if you're still with us before I run through it. All right. So in the absence of no questions, I guess Adam Ishak is no longer around. And on this note, I think we have come to the end of today's Forex Morning Mastery. It has been a great moment with you guys. I really appreciate every single one of you. And I want to wish us all the best of luck. We were able to take on the 3 financial instruments that we are monitoring for this week, which includes the USOILSPOT, the XAUUSD, and of course the USDJPY. We were able to identify beautiful trading setups. I hope you marked out the structures on our chart. If you have done so, well done, kudos to you. So all we just need to do right now is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, ensure to have a risk management strategy in place. And for those of you who joined us for the first time, I do hope you are able to gain 1 or 2 things from what we have discussed here today. If you did, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to comprehend our analytical approach. So it's on this note, I would like to wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye-bye.